Yo, today I'm talking about 4 things that affect your interest rate and some things you might want to think about and how to get your interest rate lower. So there's a few things that affect your interest rate. One is the term or the length of the loan. So typically the shorter the term you're on, meaning the faster you're going to pay the bank back, the lower rate they'll give you because it's less risk for them. The faster they can churn the money into the market, the more money they can make on their money. So they'll offer you a lower rate to get the money back faster. So if you're looking at a 30-year mortgage, it might be at, some rate. And then if you look at a 15-year, 10-year, it usually goes 30-year, 15-year, 10-year, 7-year, I believe are the tiers. Check with your mortgage lender. They might differ a little bit, but it's usually in those tiers. And what I mean by that is if you have a 21-year mortgage, you're going to get the same pricing as a 30-year. But if you have a 15-year mortgage, then that's where the interest rate break comes. Another thing that goes into your rate is your FICO score. So obviously the higher FICO score you have, it is a measure of how you interact with debt. And if they think that you are a lower risk borrower, meaning having a higher FICO score, then they're going to give you better rate and better pricing because, again, for them, it's less risk and make sure that they're going to be paid back. Risk always comes with reward. So the lower the risk for the lender, they'll reward you by way of a lower rate. Take a look at your FICO score. See if there's things in there. A lot of the credit reporting software will tell you, here are some dings on your report. Too many inquiries or too much, your balance relative to your available credit is too high, or you've opened too many new lines of credit, or you closed too many lines of credit. If you have severe black marks and low, you want to get your credit score up, and you have, late pays and delinquencies and things like that, you can actually work with credit companies that repair your credit. In fact, we've had several clients that have seen their scores go from the mid 600s into the low to high 700s in a period of weeks or a few short months, and that can have a drastic impact in the amount of money that you pay, the interest rate you pay over the life of the loan. Another thing you're going to want to look at is the loan product. So if you're in a conventional VA, FHA, jumbo, these different adjustable rate mortgage, the type of product that you're in will also determine the rate too. In some cases, like a VA loan, you have to be a active or veteran military member in order to get that. So some products won't be available to you. But if you're comparing, say, FHA rate compared to conventional rate, typically the FHA rate, the interest rate is lower. Now you want to be careful because the fees and the mortgage insurance is also really high. When you're looking at different interest rates across the different products, you want to make sure that you're accounting for all of the fees and all of the costs, because it doesn't mean shit if you save on rate just to get dinged somewhere else for something else like mortgage insurance. So even though a rate might be lower across the products, make sure that the total of the fees and pricing is such that it's actually beneficial to you rather than just a lower number on paper. And the last thing that we want to talk about is the down payment. So typically, if you have a higher down payment, again, less risk to the lender because they're not having to cover as much of the loan. And so the interest rate tends to be lower in a lot of cases for down payment. Some of these loan products are not FICO score dependent. A lot of them are not down payment dependent. So each of the products, each of the lenders have different rules and variations. These are just a few things that you can think about to try to get your mortgage rate low because, with rates being higher today than they were at this time last year, I know that's on a lot of people's minds. So those are some things you can do. You can also spend a little money to buy the rate down. You can get creative and ask the seller to credit. So there's a bunch of stuff that we could do to try to make sure that we're getting you guys, the buyers, the clients, into financing structures that work best for you and your unique situation. So that'll do it. Thanks for tuning in. We always appreciate your support. We'll see you next time.